Technology companies are feeling the heat from supply chain disruptions and tariffs, but when it comes to AI, nothing is slowing down. Big tech is still on track to pour over $300 billion into AI development next year. We'll break down why AI spending keeps rising while the rest of tech struggles. And at the end, we'll share what this resilience could mean for the economy, jobs, and your investments.
Thing number four, we're talking tech companies here. You've been hearing some complaining about supply chain disruption, tariffs, but what we continue to see and what we've been saying, and it's in the numbers if you ask me, the math is the math. AI just continues to pace, and it doesn't look like there's any slowing down there. Thing number four, Gary, technology headwinds, yet AI spending resilience.
Yeah, so, Rob, obviously the macroeconomic situation and all of this talk about tariffs and a slowing economy, and earlier in this episode we talked about the IMF, the International Monetary Fund, reducing growth forecasts. None of those are good for the technology industry, particularly because those multi-trillion-dollar market cap companies have very high valuations, and the reason they have high valuations is because of high expected growth. Anything that reduces that forward growth rate by even a small amount will have a huge impact on the stock prices and the market indexes of these companies. So, we're seeing slowing growth, particularly in devices or physical things at companies like Apple and Tesla. And challenges with trade have caused difficulty for the industry. The one thing that does seem unaffected is AI, where AI-related spending and capital expenditures continue to grow. And that's a huge contrast with the sales of physical product, which are suffering. And, I was taking a look over the weekend. Every large retailer that deals with physical product, companies like Best Buy, which sells physical technology, everybody's bringing down these estimates. And so, that's what we're starting to see. And yet companies like Amazon, Microsoft, Meta, Alphabet have planned over $300 billion in AI spending for 2025. We've had months of DeepSeek related concerns that AI spending would slow, but there's no evidence of that so far.
Yeah, Gary, I think one of the things that you nailed was really what you're seeing is these AI tools or these agents, or even just the tools themselves being able to help employees become just more efficient, more creative, right? I think you're seeing huge investment return there. It's hard to realize that right now, but I think that's where these businesses are looking at, okay, how can I get gains from these products in those certain areas? So there is a lot of talk about AI. Now it's like, okay, it's one thing to say what I just said. I mean, what are you seeing in terms of it being used in what I'm saying is anything that really actually matters?
Yeah. So as we were just talking about, we're seeing reduced device growth. DeepSeek scared everybody. Tariff concerns has the market jittery. And yet, the reason these companies are spending $300 billion this year on AI is because it's already helping some companies save money. And it's already gotten to the point where it's leaving people wondering if we're going to see higher unemployment, right? Are companies going to just use AI instead of hiring people? Or alternatively, there's a universe where we have more productive workers, right? If we have workers who are using AI and they're more productive, then it's easier to hire somebody who, wages aren't going to go up as much. If they can be more productive, then that's the kind of thing that companies would be interested in. In our view, given the implications for productivity, national security, cryptography, and of course, allowing FinX stars to make stylized photos of themselves, that's what everybody's been using AI for this month, right? We have probably, burned millions of dollars of energy just, having people making these stylized photos of themselves. But the big stuff, national security, cryptography, productivity, those trends have not shown any signs of slowing. I don't think anybody's cutting expenses this year.
Yeah, and I think Gary, it's too one thing from an investment standpoint as well. It's like when you are looking at a position, right? How is that company approaching AI? Are there particular ways in which AI could be deployed across that particular investment or business that you may be interested in? So that's a lot of stuff I've been looking at that has been curious for me is, what are those intersections of what I'm seeing or have been seeing on the digital side, and then how it is affecting the areas you've talked about: productivity, manufacturing, national security, all sorts of different type of security procedures and protocols across businesses and industries. Great stuff. Gary, this is the, or not Gary, this. To everyone watching, this is the correlation issue, this week's version of Deep Knowledge Investing's 5 Things. We're about to wrap it up with our educational topic and educational thing. Before we do that, we'd love if you could give us thumbs up, thumbs down. If you give us thumbs down, please tell us why in the comments. And then also, if you'd consider subscribing to our channel, and be sure to set those notifications to be turned on when new videos get posted, as well as head to our website, sign up for a free email subscription, and then use the Ask Gary feature. Send us a question. Gary will take a look, might end up making its way on the 5 thing, or especially if it's related to beginner, intermediate, investor education and advice.